This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm pleased to be joined by Peter Spina, the President and CEO of GoldSeek.com and SilverSeek.com. It's great to see you, Peter.
It's great to be back.
Now, Peter, what did you make of Janet Yellen's recent indication that they were going to raise rates?
Well, I think they are set to raise rates later this year, symbolically, maybe early next year, but how far can they really raise rates from these levels? With an economy that's struggling, that actually had a contraction last quarter, we're seeing weak economic data. I don't see them able to really raise rates too far, especially with all the debt out there. How are they going to go back to historically normal rates? So if anything, they'll raise it symbolically. It's not going to go up much.
So what do you mean by symbolically? As in they would just raise it a little bit, or?
I could see them 0.25%. I don't see how they can really raise rates more than 1%.
So it's not a real raise, it's a symbolic.
Mm-hmm. They're raising it from 0%. This has been at historically low record levels for such a long time. And what are they going to do in the next recession when they're already at 0%?
What's your take on the U.S. economy right now?
Well, it's moving along in some ways, in other ways it's sputtering. The growth has been lackluster last quarter. We'll see how this comes in the next few quarters, if it was an anomaly. But the data is not looking so great at the moment. I think that with a strong dollar and record prices in the markets, it'll kind of support this system right now as it'll kind of continue forward, but we won't see a lot of growth. We'll kind of see this near zero growth rate, which is really amazing considering all the money that's been created, record low rates, easy credit policies.
Now, what do you see happening if interest rates are raised? How will it affect precious metals?
Well, it's going to help the dollar. It'll strengthen the dollar versus other currencies, and that's what we've been seeing recently. The dollar's been really rallying versus the euro, the Japanese yen, and so on. And the gold price has been holding steady, so the foreign gold prices have been going through the roof. So from a Canadian perspective, the gold price has been doing very well. It's actually broken a bear market trend. And so same thing with other currencies. In the dollar terms, it could continue to base out around this $1,100-$1,200 mark. And I think that's pretty good for the mining companies, but we'll have to wait some time before the US dollar gold price really takes off.
And what do you see happening in silver? I think there was what looked like potentially a breakout earlier this month?
Well, from a technical perspective, the downtrend in silver broke a 4+ year downtrend, and that was around $16.80, $17 an ounce. And as we expected, there would be a pop. Now, what was interesting last Friday, the Commitment of Traders report showed what we expected, which was that speculators of funds that come into the market in a very aggressive way. But at the same time, the banks, the JP Morgans, came in and shorted silver heavily. So with this massive volume coming into the market, they stopped the rally in its tracks. And again, JP Morgan remains in control of the silver price.
Now, where do you see the US dollar and inflation going?
Well, at the moment, we're able to see inflation exported through the strong dollar environment. And that has been kind of what's been happening for many, many years. The US economy, the American consumer would not be able to survive and to consume the levels they have if it wasn't for the rest of the world taking those dollars and taking those savings of dollars and buying our debt or reinvesting it into America. Now, that's probably something that's not going to change very quickly, but there's a trend that's happening, and that's seeing the dollar lose its global reserve status. It's a process that's going to take probably many years still. You have the Chinese yuan that's coming as a global competitor to that, but there's a lot of steps needed before that will become a real competition to the US dollar. It's happening, and there's other circumstances with Russia right now and other geopolitical things that could accelerate this process, but the dollar is losing its reserve status, and over the coming several years, decades, the dollar will no longer be the global reserve currency, and that will be a problem. That's when the inflation problem can no longer be controlled. So at some point, when the dollars can no longer be the global reserve this strong, the inflation will come in a big way.
So you're convinced that the end of the US dollar is coming and the renminbi will be replacing it, or what will it be, special drawing rights, or?
Well, historically what made the dollar so strong was that the nation produced and it saved, and all this money came into this country, but now things have shifted. Since the 70s and 80s, we've gone from saving to consuming and going into massive, more and more debt. Now you look at China, they're doing what we were doing 100 plus years ago, producing, bringing all this capital, saving, and so on. So this is a transition period where they can become the kind of the replacement for the dollar going 50 years, 20, 55, 30, 40 years down the road. It's not going to happen immediately. Maybe in the near term it'll be more of a competition. The dollar will lose its total dominance, but it'll be more have to share the platform with China.
Now, what are you advising people to do with their savings right now? Should they be holding cash or going into gold and silver? What are you advising people?
Well, I think it's ridiculous to be speculating in the general markets now. The whole setup is looking very suspicious. It's being fed by these corporate buybacks. So where do you put your money? In bonds? Bonds are yielding near next to nothing. Putting in the bank where you're getting no yield and have risk for bail-ins. What do you do? And that's the real problem, is where do you find safety? And gold and silver are a monetary financial insurance policy, so you have to put certain allocation into that. I think historically the 5-10% level is good, but in this environment, I think you need to really take a bigger allocation in physical metals and some into the mining companies. So I think more appropriate would be 20-30% in this kind of environment.
And what are you doing with your investments these days?
Looking around at special opportunities through this bear market, we've seen a lot of companies having to finance at extremely low levels, and some new kind of companies that have been able to make some good money in this environment. Gold isn't at $700-800 an ounce, it's at $1,200 an ounce, and there are certain mines that can make really good money in this environment and certain business models that do succeed. So
what are some examples of those?
For example, we've seen some smaller junior companies, producers that are going into production with very good mines, very high margins, and also down in South America, in Peru, you have these toll milling companies that are able to take advantage of this very high grade gold ore and milling this toll milling gold ore processing.
Very low cost.
Very low cost, very low risk, very easy business model, and they're making very good cash flow numbers. So it's a great kind of investment in this kind of a market.
Now, where do things stand with the Ukraine-Russia sort of standoff or secession war?
Well, officially there's a ceasefire. But you look at the numbers every day. There's dozens of people wounded, dying, and the conflict is just simmering. It's ready to explode again. You see the Ukraine being armed heavily by the West, and Russia is supporting the rebels in the East. So the situation is very fragile, and I think it'll escalate as we go into the later part of this year. It's really there's a lot of things happening between Russia and the West, and I think if the trend continues, it's going to be a big thing to watch out, especially from the geopolitical factor. And its effect on the gold price is significant because Russia has been buying lots of gold to diversify out of dollars, and it's a financial warfare as well. So this warfare in Ukraine, this proxy war, is also spilling over into the financial side.
Now, what do you think about Greece potentially joining the BRICS Bank?
Well, that's another strategic move from the power, this axis of power from Russia, China, trying to subvert the West, the EU, Anglo-Saxon, the Western Empire's dominance. So Greece is just another part of this play. It's not it's kind of strategic, but it's not huge.
What do you see happening for the rest of the year?
I think we're going to see questions about what's next coming for the U.S. economy. These record stock prices is being fed by these record buybacks. I was saying everyone thinks everything is fine. These old habits of consuming have returned, and adding debt, and so on. That's going to come to an end at some point, and people are going to say, well, what's next? So I think the stock market might have a pretty severe correction, but it could easily go up another 5-10% before another 10-20% correction. So we'll see this kind of, I think, come to a resolution maybe into early next year. The bond market's a big question. Is that going to burst? And the precious metals, I think they're going to continue their consolidation, but the mining companies, I think, will start to do very well, select ones. So I think the rest of the year we'll start to see kind of a consolidation, the end of consolidation of some of the precious metals.
Great. Well, Peter, thank you so much for your insight and for stopping by.
All right, thank you.